Hello, folks. It's Roland Kim here from the Kim Boona team, licensed with Keller Williams and with Move to Vancouver, Canada website. Going to talk to you about what's happening in the Vancouver real estate market. We're going to touch on macro factors from a national perspective that are affecting our local economy, and then talk about some local micro trends. I'm really glad you're here. So let's get right into it. All right, these 6 slides on a national macro perspective are giving quite the telltale sign of where the real estate market is. So after the early tariff bumpiness with the real estate or with the stock market, the Canadian stock market is back at all-time highs. Doesn't mean that the economy is humming on all systems. It is interesting, though, on the stock market, how quickly it has bounced back with a lot of the uncertainty that's out there that continues to spill over into the real estate market. Interestingly, the hourly wage in Canada has remained relatively flat for the last several months. And it's again, it had a record high of in 20, let me see here, 2025 of $32 Canadian an hour, and it's kind of come off there a little bit since then. Canadian inflation, it was down to 1.7 for April, and I think that's not a true reflection of really where we are. It is slowdown was driven by the decline of energy prices in inflation, and as we remove the consumer carbon tax, and I really do believe that magnified the decrease. It'll be interesting here in the months ahead to see where inflation is going to settle at, bounce back at. I think in a couple months we will see we'll move past the short-term year-over-year change that removing the carbon tax has completed. You do get to see here over the last year the up and down of inflation, certainly well below the highs that were here a couple years ago, and yet still quite bouncy and not quite clear where inflation is. However, at 1.7%, that was in April. The most recent Bank of Canada meeting did decide to keep interest rates flat. The overnight rate didn't change, and in a large part that was due to the inflation being only 1.7 in April of this year. Our exports are at low points for the past year. As you can see here, in April, Canada's exports dropped to 60 billion, the lowest since June 2023. It's the third consecutive monthly decline and the strongest decrease in 5 years. So definitely the U.S. Tariffs are having an impact on our exports and the confidence of the consumers out there. Employment status, unemployment persons in Canada has increased to 1,548,000, up from 1,508,000 in March, and it is expected to continue to go up a bit. The unemployment, unemployment forecast is still several months of further unemployment before hopefully the economy regroups and gets going again. And so that is having an impact because all of this is impacting people's obviously financial strength and their capacity to make big decisions like purchasing a home and their confidence in the economy, which right now is not that strong. So let's talk about interest rates and mortgage trends. Nationally, what we're seeing is the average Canadian house price right now is down to $689,200. It is down from $697,600 in March of 2025. The average price in Canada averaged 472,000 in 2005, and it's averaged as high as 873,000 in February of 2022. But again, it has come down since then, and the average Canadian price right now, if there is such a thing as an average house, is $689,200. Canadian homeownership rate, it was at the highest point it's ever been in 2021. Homeownership rate in 2021 reached 66.04%. Reached 69.3% in 2021. and it has been coming down since then. And we are likely going to see that trend continue because with the high cost of ownership and the shortage of housing, more folks are are moving into rental and choosing that as their path forward for many challenges that are there. So that's a really negative trend that is being established as less Canadians are becoming homeowners. Canadian home sales. Canadian home sales decreased to 35,834 in April from 35,862 in March. And the home sales in Canada, let's see, the average is wow, the average between 2007 and 2025 was 41,387. So we are about 6,000 nationally sales, 6,000 sales off our national 10-year average. Here you can see kind of the ongoing trend. Talking about rental rates. So rental rates have come down across the country. Other than Halifax, nationally, most rents have come down. In fact, asking rents in Canada averaged 2,129 in May, a decrease of 3.3% compared to a year ago when rents reached a record high of 2,202. And that's the key point. Even though we're down this year, that's on the back of several years of rent increases to all-time highs. So the rental rates are still really high for folks who are renting. National year-over-year rental rate trends. So you can see here that on the left slide, you can see the graph where we peaked last May at rent being at its highest. It's come down since then. The right graph does a really good illustration of showing you the 3 previous years of substantial rent increase pricing. So a decrease this year of 3.3, does very little to offset the 25% increase the prior 3 years combined. What's happening on government policies and global influences? So many things are happening out there. And let's talk about national population. As of January 25, Canada's population was 41,528,000. And this represents an increase of about 745,000, 1.8% versus the previous year. The quarterly growth rate for the fourth quarter of 2024 was 0.02%. We are seeing is a slowing trend from the peak that happened the previous year, but still growth in the national population, but certainly less than the previous couple of years. Provincially, the estimated population of British Columbia was 5,722,000 in Q1 of this year. And that represents a slight increase compared to Q1 of 2024. Foreign buyer ban status update still remains. The foreign buyer ban is set to expire January 1st, 2027. It was extended for another few years in February of 2024. So that is continuing to have an impact, right or wrong, on the local real estate market and the national real estate market. So what's happening all over the globe internationally? What's happening in the US? How's that impacting us? Well, so much uncertainty is out there that the current economic environment and the potential for further US sanctions and tariffs have definitely dampened our housing demand. And although interest rates are lower than they were a year ago, still many Canadians are renewing mortgage rates at substantial higher numbers than what they locked into at the historical lows during the pandemic. And so it's causing a lot of cautions, causing a lot of trepidation. And in that, the market is a lot less busy than it has been. And let's talk about what is happening. So micro in local Vancouver area, the month of May, last month, we saw 2,228 transactions, which represents an 18.5% decrease versus the same month a year ago. So this figure spans all categories: detached, attached, and apartment units. It highlights a significant year-over-year decrease and placing 2025 well below historical seasonal averages. Currently, what we're finding is as of June the 9th, a couple days ago when I ran the numbers, we registered 646 transactions on the Vancouver Real Estate Board, which is an average of 71.7 per day. When I calculate this for the month of June over 30 days, we're trending towards an estimated monthly total of transactions for around 2,153. If that is where we settle, that will represent approximately another month with about a 22% reduction in transactional sales versus June of 2024, which again was not a hot month. So the market is continuing to trend sideways and at these new lower numbers of transactional sales. That being said, the average property type price for the three different types as of May 2025, the typical price for a detached house in Metro Vancouver is $1,997,000 and change. That represents a 3.2% decrease from May of 2024 and down 1.2% compared to April 25. As of May 25, the benchmark price for a condo apartment in Metro Vancouver is $757,300. This reflects a 2.4% decrease compared to May of last year and a 0.3% decrease compared to April of this year. As of May 2025, the benchmark price for a townhouse in Metro Vancouver is $1,106,000 and change. This represents a 3.4% decrease from May 2024 and a 0.2% decline from April of 2025. The benchmark price again represents a quote unquote typical condo, detached, or townhouse in terms of features and location as tracked by the MLS of our board. The benchmark reflects a typical home based on that data. There is really no typical home that you can go and buy, but it's the aggregated average. Vancouver active listings, 17,094 active listings on the MLS. That is a 25.7% increase compared to May of 2024, when it was 13,600, and a 45.9% increase above the 10-year seasonal average, which usually is 11,718. 6,620 new listings entered the market during May. This is up 3.9% versus May 2024, and again, 9.3% above the 10-year average. Vancouver sales to active ratio. So in May of this year, the ratio of Metro Vancouver sales to active is 13.4. So that means for every 100 homes listed on the MLS system, 13 of those listings sold. What that means in plain terms is if it is below 12%, it's a clear buyer's market. That means there are more listings than buyers. And if it's 12 to 20%, we kind of call that a balanced market. Although at 13.4, it feels on paper, it appears to be a balanced market. It's certainly more of a buyer's market right now, in my opinion. But the numbers say it's a balanced market. If it were above 20%, which we're not going to get for a while, that would be constituting a seller's market. Vancouver days on market. So right now, the average days on market are for detached homes, 32 days, for townhouses, 27, apartments, 31. Keep in mind, these are for when a property is listed and then sold. If a property is listed and then unlisted or canceled, it does not calculate into these numbers correctly. And a lot of properties in this market are taking a really long time. So they're being listed multiple times, and it makes the market feel like things are selling quicker. Again, when a property sells, you need to check whether it's been previously listed to get a true understanding of days on market. Listings are spending, again, about 1 month on the market if they sell, but several properties will be listed multiple times before they sell. So what am I seeing? The next 3 months are really looking like soft conditions, elevated inventory, and a sustained sales to active ratio that is suggesting we're going to remain in a buyer's market through the summer months. With listings surpassing pre-pandemic norms, buyers are going to have a lot more leverage in the summer here to see where the prices will land by the end of the summer. So it's a real buyer's opportunity in the next 3 months. I do see a modest price recovery expected in the future. We're probably expecting a low single digit price recovery by the end of 2025. I'm assuming there's no major macro shocks from the US or from a political world out there. By the end of this year, I believe we'll be shifting to a true balance market. We're seeing that as the interest rates will likely continue to go down. If there's no dramatic shift on the macro world stage, I think more buyers will be coming back after years of sluggish sales. And so we'll have some low growth by the end of the year. But again, a very modest growth year. Right now, we're in a buyer's market, and we'll finish, I do believe, in a balanced market by the end of 2025. My advice to buyers in this market, right now is your market with a sales active ratio around 13% and inventory at record highs. You have the leverage to negotiate a price on terms and conditions that work for you. What I'm finding is that buyers often aren't aggressive enough, aren't, testing the market, and sellers really aren't lowering the price like across the board on where they're willing to settle. So as a buyer, you need to go out there, figure out what's right for you, and then figure out what the price is, and just try being realistic, and yet taking a couple attempts at finding the right price of the right property. You will be pleasantly surprised. So take your time, be ready. Homes are sitting a little bit longer, but well-priced properties continue to sell pretty effectively. Get pre-approved, of course, and be ready to pull the trigger when the right one appears. If rates continue to drop in the second half of 2025, which I personally believe they will, because I believe the recent decrease in inflation was short-lived, you'll find better opportunity to lock in a great rate. My advice to sellers, price sharply and be prepared. Get your home ready. Do everything you can to get your home beautiful, curb appeal, ready on the market, staged, and make sure that you bring your best product forward and price it correctly. Most sellers are still hoping for a little bit more than the market will bear, and they believe they're adjusting substantially from the 2022 April market highs, but they're often not low enough. And there's so many listings out there that can really trick a seller to think, hey, I'm better than those 4 listings, but they're looking at the wrong thing. They're not looking at the solds. They're looking at other active listings. So if you're a seller, really have honest conversations with yourself so that you are one of the properties that sells versus one of the properties that helps other listings sell. If I was giving advice to investors, focus on the long-term fundamentals. Vancouver remains a top-tier market for appreciation over the long run. Right now, we have a softness in the market. Use that to your benefit to get high-quality assets below peak pricing. There's no way of building this new inventory for less than what you'd be paying today. As the market warms up, the prices will start going the other direction. And right now, a lot of pre-sales have been canceled because the developers can't make the numbers work. That's a short-term retraction that will cause future compression on price, which is going to make future condos more valuable as it recorrects itself in that time gap between where properties are now on the market. Developers are not building new ones, and eventually these will be sold, and then we'll be short on inventory again. So it's a short-term opportunity, so to speak. Cash flow's tight, choose wisely. Make sure that you got all your numbers covered as operating costs continue to go up. I mean, maintenance fees are astonishingly high. I feel like everything from city taxes to every utility has an tethered ability to increase, and as a result, that's being passed on to us, the investors. And monitor upcoming opportunities in the zoning changes and really pick through the inventory to get the best deals. Everyone's real estate situation is personal and different. I'm not a social media star. I'm a local realtor offering great advice. I'm trusted, strategic, and local, and I would love to sit down with you and talk about your real estate needs. You can reach me online, and please share this if it was valuable, and subscribe to the YouTube channel so you get all my upcoming videos. I appreciate you watching. Have a great day.